they pushed you. They said you're not patriotic if you don't buy these bonds in 1918, right? And then in 1933, they consider you an enemy and they steal your money. I mean, anyone who thinks FDR was a great president, they have to have their heads re-examined. The guy was the biggest thief. It was the biggest heist. Tuesday, November 14th, 2023, Maneco 64, home of alternative economics and contrarian views. We're going to look at government bonds today, or bills or notes, whatever you want to call them. Many people seem to think that it's safe to put your money to work, that government will never default, that they can always print, and that's true. Yes, they can always inflate the debt away and your purchasing power decreases. But today we're going to look at how they can basically default on their government bonds, and they can use the law, executive orders, all against you. So we're going to look back at history. And for those of you who think government would never do that, hopefully this will help you understand that that's not the case. And before we look at that, I just wanted to give you this week's special at Miles Franklin. Miles Franklin, of course, is one of my affiliates in the United States, precious metals dealer. So they've got 2023 Silver Philharmonics at only $3.40 over spot. They've also got $20 gold piece, Liberty, random dates, only $165 over spot. And they've got 2023 Platinum Philharmonics, $105 over spot. And here in the UK, Gold Investments, they still have their special on various dates. Sovereigns, if you use Maneco 64 Sov, you get 5% off their price. And also on 1 ounce gold Krugerrands, if you use Maneco 64 Krug, you get 1% off the offer price. So on Sunday, I had a great panel, in my opinion, and we're talking about the bond market and how dangerous it is, especially with interest rates and yields going up. That means the value of your capital is actually taken away, because if you buy a bond for a 2% coupon and then yields go up to 4%, if the issuer of the bonds wants to issue more bonds, he's going to have to pay 4. So the value of your old bond is kind of halved. You know, they couldn't offer the bond that you own at 2%. So that's why the price goes down. But that also means that if you want to sell it, you get half your money back. And that's to do with interest rates and how they inflate the system. And of course, we all know that inflation is not rising prices. It's governments and central banks borrowing and printing money respectively. And that's what dilutes the currency. That's what creates the higher yields. And I also spoke with Jack Gamble of Nobody Special Finance. We did an interview, which I did an interview with his channel, and I published it on my channel on Saturday. And we spoke about the great taking, how they technically can take all your securities away. There's rules, regulations, laws in the books, and you might say, oh, no, they can't do it. It's registered in my name. Well, go read the book, The Great Taking. He talks all about how they've covered all their bases, and not just in the US, but in the UK and Europe. And you can find the book by just Googling The Great Taking. It's a free PDF. And yeah, you might choose to ignore it, but you do it at your own peril. So today, though, I want to talk about something that I found out yesterday virtually, and it's to do with Executive Order 6102. And we know that usually we talk about this as gold confiscation, that you had to hand in your gold that you had at home as savings, and that you couldn't take out your gold from the bank. Roosevelt made gold ownership illegal, and it was so until January 1st, 1975. But I found something really interesting that shows that it's even worse, the gold confiscation. But first of all, let's go through Executive Order 6102. It says, an executive order signed on April 5th, 1933, by U.S. President Franklin D. Roosevelt, forbidding the hoarding of gold coin, gold bullion, and gold certificates within the continental United States. The executive order was made under the authority, wait for this, of the Trading with the Enemy Act of 1917. That was to do with World War I. Keep that in mind. As amended by the Emergency Banking Act in March 1933. And those dates are really important. It's not because it was just after he was inaugurated. You will see as we proceed. So now I want to look at something called Liberty Bond. And what are Liberty Bonds? Some of you might know about the Liberty Bonds, so let's go through it. A Liberty Bond or Liberty Loan was a war bond that was sold in the United States to support the Allied cause in World War I. So subscribing to the bonds, wait for this, became a symbol of patriotic duty in the United States and introduced the idea, wait for this, of financial security. So there you go, to many citizens for the first time. So there's the old saying by the elite, we're going to kill two birds with one stone. They got you to finance the war to end all wars, right? And they got you to trust securities, trust Wall Street, right? So before we go further into the Liberty Bonds, just want to talk about propaganda. And nothing's changed. They did it during 2020, during that event. They did it here. They did it in the US. You know, we got to do this for everyone. We got to be in this together, right? We got to clap for the NHS and all that. Well, back in during World War I, they did the same, as you can see here. Are you 100% American? Prove it. Buy U.S. government bonds. Third Liberty Loan. Another example here now of jingoism, right? The Russia bashing. Well, back then it was Germany. Remember Belgium? Buy bonds. Fourth Liberty Loan. And they've got like a German soldier here basically taking a young Belgian woman, I assume. And then they have that liberty shall not perish from the earth. Buy Liberty Bonds, Fourth Liberty Loan. Then they've got Americans all. And they're playing on your emotions here, right? Victory, Liberty Loan. Another jingoistic one, Halt the Hun. Buy U.S. government bonds, Third Liberty Loan. And it's ironic because at the time, a lot of Americans spoke German. I think almost half of all Americans back then were of German descent. So it's very interesting. And then they've got Woodrow Wilson here. The time has come to conquer or submit. For us, there is but one choice. We have made it. Buy a bond of the Second Liberty Loan and help win the war. The reason I'm going through this is because you're going to see what happened to these bonds, and you're going to be shocked and outraged, I would say. Liberty Loan, become a patriotic bondholder. So they're pushing you to buy bonds. Your duty, buy U.S. government bonds. And they use the celebrity as well, as you can see here. Douglas Fairbank, movie star, speaking to a large crowd in front of the Sub-Treasury building, New York City, to aid the Third Liberty Loan in April 1918. And I've looked into Douglas Fairbanks. I had heard of him. And it says here, this is how popular he was. Fairbanks was a founding father of United Artists. He was also a founding member of the Motion Picture Academy and hosted the first Academy Awards in 1929. I wonder how much he got paid to push people into these bonds. It also says, though he was considered one of the biggest stars in Hollywood during the 1910s and 1920s, Fairbanks' career rapidly declined with the advent of the talkie. So there you go. They do the same today, don't they, with the celebrities? Just wanted to put that out there. So let's have a look here. Liberty bond issues 1917 to 1918. So you can see they issued a total of four of these loans or bonds. And now I'm going to skip to the part where they talk about repayment and the default of the fourth Liberty bonds. So the repayment, the first three bonds and Victory Loan were partially retired during the course of the 1920s, but the majority of these bonds were simply refinanced through other government securities. So, and you have to remember that back then, these securities, if you sold them and if you got interest paid, you could ask for gold coin because the US was in a gold standard. So let's skip to the default, because this is where it gets really interesting. And many people, and me included up until yesterday, thought that this Executive Order 6102 was just to seize a lot of your coins, gold coins. But I think it seized a lot more than people think, because indirectly all these bonds were redeemable and they paid interest in gold coin. There's an article here talking about how much gold was confiscated. And according to this article, 85.6 million troy ounces were confiscated. So that's what it says here. And they might be right. The actual coins that people held, right, and that people handed into the Federal Reserve for the Treasury, on behalf of the Treasury, right? But let's go through the fourth Liberty bond. So it says the first three Liberty bonds and Victory Loan were retired during the course of the 1920s. However, because the terms of the bonds allowed them to be traded for the later bonds, which had superior terms, most of the debt from the first, second, and third Liberty bonds was rolled into the fourth issue. What does it mean, better terms? Well, they entice you with higher rates, and they're doing that today with the Treasury bills, with the gilt bills, right? They're paying over 5%. Don't be fooled. They're enticing you because they want to take your money. So here are the details of the Liberty bonds, and it's important to look at this because there's some interesting dates here. So you can see the coupon was 4.25%. It was callable starting October 15th, 1933, right? And the maturity date was October 15th, 1938. It was a 20-year bond. The amount tendered, well, they're trying to borrow $6 billion, and people bought $7 billion worth, a bit more. The bid to cover wasn't great, but they bought $7 billion. And here's where it gets interesting. The terms of the bonds included: the principal and interest hereof are payable in United States gold coin of the present standard of value. This type of gold clause was common in both public and private contracts of the time and was intended to guarantee that bondholders would not be harmed by a devaluation of the currency. However, when the U.S. Treasury called the fourth bond on April 15th, 1934, it defaulted on this term by refusing to redeem the bond in gold, and neither did it account for the devaluation of the dollar from $20.67 per troy ounce of gold, the 1918 standard of value, to $35 per troy ounce. The 21 million bondholders therefore lost 139 million troy ounces of gold, or approximately 41% of the bond's principal. Well, I'm going to come to numbers in a minute. I don't agree with the 139 million, but it's a lot more than the 85 million that were confiscated directly from people handing it in, right? So anyway, this is the important part here, the legal basis, and it shows that governments will resort to really devious and really bad things. It says the legal basis for the refusal of the U.S. Treasury to redeem in gold was the Gold Clause Resolution dated June 5th, 1933. The Supreme Court later held this to be unconstitutional under Section 4 of the 14th Amendment. We conclude that the joint resolution of June 5th, 1933, insofar as it attempted to override the obligation created by the bond in suits, went beyond the congressional power. This is from Chief Justice Charles Evan Hughes, Perry versus the United States, 1935. But here, it doesn't really matter what the Supreme Court decided or the Chief Justice, because it says, however, due to President Franklin D. Roosevelt's elimination of the open gold market with the signing of Executive Order 6102 on April 5th, 1933, the court ruled that the bondholders' loss was unquantifiable and that to repay them in dollars according to the 1918 standard of value would be an unjustified enrichment. The ruling, therefore, had little practical effect. So they said, well, too bad, you're not going to get your gold. It's unjustifiable enrichment. The most outrageous thing about this whole incident for me, though, is the fact that executive order, which allowed FDR and the Treasury to basically confiscate 21 million savers' gold, was that they used Executive Order 6102. And the basis for that was the Trading with the Enemy Act of 1917. So they pushed you. They said you're not patriotic if you don't buy these bonds in 1918, right? And then in 1933, they consider you an enemy and they steal your money. I mean, anyone who thinks FDR was a great president, they have to have their heads re-examined. The guy was the biggest thief. It was the biggest heist in U.S. history. It wasn't Bonnie and Clyde and all the bank robbers. It was FDR. And even in Brazil, where I grew up, my father's office in Rio was on the Franklin Roosevelt Avenue. Why in the world would they celebrate the biggest thief in history? So now let's go through some numbers, because I don't agree with that 139 million. And yes, just keep in mind that up until January 1934, $20.67 was the equivalent of 1 troy ounce of gold. It wasn't the price of gold, because gold didn't have a price, because gold was money. So the Fourth Liberty bond or loan, they sold $7 billion in 1918. So you divide that by $20.67 and you get 338,655,055.6362 troy ounces of pure gold. So basically, that's how much gold they stole from the savers, the people that were holding those bonds in 1933. And also when they recall the bonds, which means they pay it back, they're supposed to have paid that amount in gold, but they paid it in paper. And that's why I don't agree with that 139 million. I might have made a mistake. There might have been something else. But the principal, the 7 billion, equates to that much. And how much does that equate into metric tons? Because nowadays the US holds just over 8,000 metric tons, just to show you how outrageous and how much of a big swindle this was. Well, the 338 million troy ounces equates to 10,533 metric tons. So I would argue that the United States government would have defaulted if they had to pay that back, because in 1938 it was going to mature. And you can have a look here at the gold reserves of the United States. In the early 30s, it was way less than 10,000 metric tons. And why do you think it went up so much in the 30s, up in the run up to World War II? Well, because they're able to get rid of that liability, and the gold that should have been paid to the 21 million savers went into Uncle Sam's coffers. And who benefited from all this? Well, the government, of course, but also the bankers and the very wealthy. And to see who really benefited from that, I would recommend you read the pamphlet by Smedley Butler, War is a Racket. All the big corporations, when they did business during World War I with Uncle Sam, they got paid in gold because they got paid in dollars. And at the time, dollars were on the gold standard. Dollar was gold. And I'm sure the very wealthy, the Rockefellers, the DuPonts, and the Carnegies, and all the JP Morgans, all the people that made a fortune from World War I, they knew what was coming, and they weren't holding those bonds in 1933, you can bet. So that's why I say beware and hold government bonds or treasury bills, even 1 month and 3 months, at your own peril. They can do whatever they want. They can use laws that you think were supposed to be for enemies against you. And yeah, the Patriot Act comes to mind. Here in the UK, I'm sure they've got other acts as well related to 7/7, and they can use that against you to basically take your money away from you. And that's why I keep saying it's always very important, in my opinion, to have something outside the security system. That's the other thing. They got people involved in Wall Street, right? In the financial sector. And that was, I think, the biggest mistake for people. And I think there's still a lot of people out there whose grandparents or great-grandparents didn't buy into it, and they probably have that streak that they don't trust Wall Street and the banks, and I think rightfully so. So let's quickly check where the markets are this morning then. It's 8:42 a.m. London time. Spot gold is at 19.45. It's down about $1. High's been 48, low's been 43. Silver's up 4 cents at 22.34. High's been 42, low 26. Stock market is up slightly, not much to write home about. And I would say the currencies as well haven't really done much. So we're just gonna go skip to the commodities, see where they are. WTI crude is up a third at 78.40. Brent is up a 0.25%. We're back up to like 82.50. Yesterday we're down at 80. So crude has rebounded. Let's have a look at platinum. Platinum is up a couple of bucks, trading around 870. High-grade copper is unchanged at 369. So now let's look at those certificates of confiscation or government bonds. They call that back in the 70s, they called them certificates of confiscation because of how inflation diluted the value of them. But the 10-year yield is unchanged at 463. And when I look at the bills, which are any treasuries up to 6 months or up to a year, their yields are around 5.5%. And that's very enticing, very tempting. But don't forget the story I just told you. Very dangerous, I would say. The UK, same thing. The gilt bills are all around 5.5%. The 2-year, though, is at 472. That's up 7 basis points. And the 30-year is at 480. Well, what I'm trying to say here, it's not just the long-term bonds that are not safe in terms of purchasing power. All of them are not safe, especially after you've seen what they did in 1933. So with that, I'm going to wish you all a very good day. Take care. Bye.